talking the E-mini S&P with Dr. Charles Schaap. Hi, Charles.
Hi.
So talk about trading the E-mini S&P.
The E-mini S&P is excellent for the day trader or the person who wants to trade intraday to make daily income. It's an excellent vehicle because the market is always moving, and all you need is some volatility to catch some good trends in the E-mini S&P. The E-mini S&P is a futures contract that's 1/5 the size of the big S&P contract. And you can trade it down on a 5-minute chart, works very well, and look at a higher time frame like the hourly chart, and develop strategies to take advantage of the market open, reversals, trends throughout the day, etc.
What about this hourly chart? Because there's an extra half an hour that's left over. What do we do with that?
Well, that becomes a small 30-minute bar in most charting programs. But the most important thing is that you should use bars that are divisible into an hour. So a 5-minute chart, a chart with 5-minute bars, you'd have 12 bars in the first hour.
That's it. Any other time frames that work really well?
Well, you can actually trade looking at a daily chart and an hourly chart, and with a little bit slightly longer term position if you can hold overnight. But for the most part, it's an intraday strategy. You can also use a 25-minute chart and a 5-minute chart, a 5-minute chart and a 1-minute chart. But the main thing is there's a great edge by using dual time frames, because you use the higher time frame for your price targets. That is, where you expect price to go or where you expect it to start from. And you enter using a lower time frame, so you can enter a little earlier and actually see the trade developing faster. The lower time frame leads the higher time frame in terms of momentum principles.
And how do you manage risk with this strategy?
The best way to manage risk is to always put in a stop loss at the moment you enter your trade. And the trading platforms out there allow you to do this, so that as soon as you put in your buy order, the sell order is automatically in place at the same time. These are called bracketed orders, where you can enter at a certain price and it will get you out at one price and the stop loss is already set. That's the most important thing. In general, start with a fixed price amount for your stop loss. That may be 8 ticks on the ES Mini, or 10 or 6, depending on how tight you want to make it. But the main thing is use your stops, don't move them.
Charles, thank you.
Thank you very much.
I've been speaking with Dr. Charles Schaap. You're watching the MoneyShow.com video network.